Today is Saturday, July 31st, 2021, and it's time to review how our options trading strategy is doing for the month. I've been trading options for a while, but I really haven't tracked the performance of it, but I'm thinking about doing a series on the options trading. So I started to track the performance in late June and decided to share with everyone what I'm doing on a monthly basis. Now, I do check my options regularly, probably about once a week, and make a decision on whether or not I should cover them or not. But these videos are really only after the month has closed. What I do with options is that I don't do a lot of risky trading with them. I primarily write cover calls on my long position. And if I have a large cash position, I will do cash secure puts, but that's about the extent of it. I don't do anything crazy. And typically what I do is I write options. I like the stocks that have weekly options, but I would write them for 30 to 45 days out. And then I would check on them periodically and look to cover. So in terms of current position, let's take a look. These are the options that I currently have open that have not expired yet. And right now, I'm probably down about, call it 1,300 on these positions. The biggest loss is on XLE. That's the September 3rd call at 52. And I think I'm going to be okay. It's still a ways out, so I'll just keep checking it through the month of August. And if there's an opportunity to cover at a nice gain, I will do so. But that's what's really driving the loss in the position right now. The rest of it is looking okay, and there's still plenty of time for the premiums to decay. So I expect to come out on top by the end of August, and we'll see how we do when we get to that video. But in terms of performance in July, I ended up covering XLE quite a number of times, you can see up here, and made decent profits on them. Usually you don't get a lot from writing cover calls. You may get 3 to 4% if you're pricing the strike price 7 to 8% above current trading prices. But on XLE, there's a lot of interest, and people are speculating on them, and the premium is really good at the moment. So that's really driving everything. But in terms of July, I realized about 12,500 in profits, and that's great. In terms of what I have at risk, I have about $800,000 at risk. So it's hard to see here, so I'll zoom in. But on the options contract that I've written, I'm putting about $800,000 at risk, and if I get 10 to 12,000 a month in premiums, so in this particular model here, I had assumed that I was going to collect about $9,100 a month in premium. That would translate to about 14% on an annual basis for this value invested. Now, I don't expect that I would have the 12,500 realized gain every month. But if I did, that's going to cause this to go up even more, right? Close to 19%. I don't think that's realistic, so I'm going to turn this back. But like I said, what's really driving it is the energy sector. So XLE, the premium is just ridiculous. So what I try to do is that I try to price it maybe 7 to 8% higher than what it is. So current prices is about 49 something, call it 49.50. That's why I had a strike price of about 52 on it. And the premium is just ridiculous. So we can see that, that's where I'm generating most of my profit. The other area where I'm getting quite a nice return is on cash secure puts on the NASDAQ 100. That's also generating quite a bit of income for me as well. And if we were to look at the calculator here, if you put about $70,000 on cash secure puts on the NASDAQ 100, you can expect to get about $800 a month in premium. And that would work out to be about $10,000 a year, right? $9,600, something like that. So let's see. It's 800 times 12, so 9,600. And if we were putting about 68,000 or 70,000, depending on the strike price, but call it 70,000, you're going to get about 14% return on an annual basis on the cash secure put. And that's pricing at about 5 to 6% below the current price. And I think that that's where you get a lot of value for premium. So that's how I'm currently doing it. But this month has been great for options. I don't know if I'm going to realize this going forward, but this is how we perform in July. Check back in August, and I'll go over the trades again. So like I said, right now, as of close of Friday, I'm down about $1,300 on the open options that I have. But like I said, they have quite a ways to go. And I expect that the time premium is going to decay as we get farther into August, and these should turn positive. All right, thanks, and I'll see you later.